Okay, guys, good morning to you once again. Today's the 10th KEL. All right, so before we start the day, let me just double check my screen, all moving well. So later on itself, please make sure that disclaimer apply as usual. And of course, on this note itself, we'll do the revision for the 9th of June market. We'll be covering gold again later. Okay, so let's go to the market right now. Okay, so to start this morning with a very interesting thing that I want to re-emphasize is this. Okay, I saw it while I was jogging this morning. Apparently, itself, a woman complained that UT Chai Peng store charged her $17 for meal with fishtail. Okay, all right. Now, I've been telling you this, that prices will keep going higher. But of course, naturally, it's because this particular fish costs more. It's because it's based on the market price. Okay, you can see that over here itself. It's mentioned that for fish, it'll be based on market price. Okay, so apparently she paid for the fish. I mean, yeah, decent size. Like if you ask me, not very big, but okay. I remember previously Susan also bought for me this fish tail itself for me, and I think the cost come out to about also like $15. Okay, so guys, if you want to eat fish itself, please check with the owner actually for Chai Peng store itself. So the thing is this, guys, price is definitely going to go higher. It's undeniable. I've been telling you this. I'm preparing you for this because back then itself we had COVID and we saw it ourselves, and now China is having some little issue with the economics. And then you can see that this Federal Reserve is relentlessly not going to cut rate until September. Because of all these things itself, right? Just imagine if really they start to cut rate. Because now you can see what's happening in Japan. Japan now is having a bit of issue because Japan, their bonds prices are really going down at a rapid state. And because every time they increase interest rate itself, right, you will see a natural movement in the bond market. And the carry-in trade itself is no longer very fair because it's like now you're paying interest on that. Previously it was 0%. So the thing is this, the cost is increasing. So naturally itself, people are not going to borrow the yen. Hence, the carry-in trade will no longer be there. Hence, therefore, if that's going to be the next thing itself, usually we have observed that whenever there is a increasing of this interest rate in Japan, we do see that the stock market will fall. Okay, the stock market will fall. Now, China and US has set to continue trade talks, right? Although Donald Trump thought the good report from London, but we all know the fact is that that's not going to be the case. Okay, maybe they'll just talk about it, just smile about it, and then move on. But of course, we all saw that Elon Musk has got a little bit mellowed down. All right, started to retweet this reacts or retweet this Donald Trump messages. But Donald Trump also came back and said that he knows that Elon Musk will come back to find him one day, but now he's not comfortable to see him. Oh my goodness. Okay, very good way of using the words itself here. Okay, so I can say is this: at the moment now, the CEO are thinking that the recession will likely not going to happen. Now, previously itself, there was one stage itself more than 60% in April says that there will be a recession due to the tariff, but now less than 30% thinks that there will not be a recession. So again, when people get comfortable and complacent, that's usually things happen. All right. Now, I'm not saying that I'm trying to be being a doomsday guy. I'm just informing you that why need to bluff yourself? Okay, what we are seeing is clear. The employment data itself is creeping up by a very slow pace because there's no anything really significantly happening now in the market. But the thing is this: if one day, be it to be like earthquake or be like a COVID or something very disastrous that's big enough, it will hit the market, and then that is where who is swimming naked itself will be very, very clear. So that is the reason why I'm trying to inform you guys that trading, getting yourself prepared is a very important thing in the market. All right. So again, I hope that you guys understand where I'm coming from. Okay, because I don't want you to misunderstand that you think that I'm trying to be a doomsday guy. Okay, today the dollar has recovered a bit. As a matter of fact, covered up the yesterday's selling. So that's why you see gold this morning has came down a bit. Yeah. Okay. So the question you will still ask me, Kel, why the gold recently very hard to trade? I received at least 4 messages regarding about gold. Why is it difficult to trade? So I'll explain to you through the dollar yen first. Okay, the dollar first. Yeah, the dollar has been okay, hold on. The dollar has been sideways, all right, the last few days, right? Sideways, yeah. Okay, I've been sideways. Okay, bench charts of colors. Has been sideways. Okay. Can you all get a better color? Okay, let me find a darker color. Okay. The market has been sideways for the last few days for the dollar index. So that's why gold one day up, one day down, one day up, one day down. A little bit difficult to trade, right? I understand. Because now the market has moved the focus to silver. Yes, silver. Let me bring you the silver chart right now. Everybody take a look. Take a look. This is silver chart. Wow, look at it. Incredible, right? The silver chart has from 33 all the way escalated to the high of 36.87. All right, so you can see that it went up by 10% recently. Okay. Then if you compare this to gold, you look at gold chart itself, right? You see white, black, white, black, white, black color, right? And you can see that basically it has been went go sideways. But of course, if you look carefully, for gold itself, this is the white candle, and then this is the KCB. So yesterday, eventually the market really came down and touches the KCB here, exactly that level itself yesterday. So now the thing is, there's very good chance that gold will try to go down again to retest. So what's this number on KCB again? This number is 3299. 3299. Okay. So yesterday when gold hit 3299, I thought my friend of mine said he can buy some gold over there. He bought it and made some money, about nearly 2 grand on the gold itself. That's good. But this morning itself, right, he tells me, Cal, why am I losing back the money? Because I told you that once the market breaks OP, no matter what you tell me, it's always a seller. Now, I've been saying this up 10 times, guys. When the market is below OP, you are a seller for now. The market is above OP, you're a buyer for now. I know that there's still a lot of tendency to go and buy from the bottom or sell at the top. That's swing trading. And I've said this enough time to you that swing trading is good if you are able to control your risk. But you're talking about long haul wise itself, right? It's always better to do follow through trading. Okay, if all clears up, press number 1 right now. Okay, all right, thank you. Let's now go to the gold market for today. Now, this morning, the gold opening price is 3325.97, MLP 3319.11. So by default itself, the opening price was above MLP, is a buy, right? But instead, the gold open straight away go below OP. So you have to sell. There's no other way out. And then once the market breaks MLP, that's it. Once the market broke the MLP at 3319, that's it. Nothing to say. Because why? MLP is supposed to be the very important support level, but yet the market smashed through it. So once you go below it, there's nothing to say. You just have to be a seller. But you say, Cal, you said before, right? If the KSI is green, we can buy at the KTR -1, -2, -3. Yes, I have said that before. But the condition is that you have to hit that level and rebound. Later, you see the 5-minute chart, there was no rebound at all. And now to make it worse itself, the KSI on the day chart has turned to red color now. This is making the thing worse, right? So with the big market now more to the sell side, then I'm not going to tell this upfront. There is a very good chance we will retest the 3299 KCB again. A very high chance we'll test it again. And then this morning, the low was 3302.95. So if the gold do come down 3299 and stabilize again and rebound, maybe I'll buy some gold over there. Okay, that's swing trading idea. But because the KSI is green already great color, right? So I'm not comfortable to buy already. As in buy a lot lah. Compared to yesterday, we bought some. Today, I'm not that comfortable already. Okay, understand that? Yeah, important, yeah. Okay, then you look at this thing right now, you can see that the next target is if the market really break break the KCB, then where would it be going next, right? Then of course it will be going for the pivot 2. Now this is going to be very scary because it's going to be 3270. That's quite a bit of downside to go, yeah. But you must understand this number itself, if you look carefully, it was actually traded just about 2 weeks ago. And that was also not the lowest point, but it was a very important turning point. As you can see, the bar turns red, but the KSI was green. So the next day, gold shoot up by quite a fair bit. I think on a single day, the gold shot up by almost $83. Wow, one single day up by $83. So I mean, put it this way: what means can come down, right? Everything is just part and parcel of the whole thing itself. Okay, so for me, I'm still bullish on gold, but the elephant trade is no longer existing unless the KSI turns to green again. Okay, then if not now, the elephant trade is not, it was never been triggered. because the market never broke the previous high, so it was never being triggered. So please don't misunderstand the elephant trade. Yeah. Okay. All right. So that is gold for now. Okay. Let's just go to the Dow Jones. Okay. Now, Dow Jones has been really trying to struggle its way up, but then it still went up, yeah? From the lowest point here, it went up to the high. It's up by about 1,000 points across 8 trading days. But these 8 trading days didn't lack of any, it was up, down all the way, squeezing the market. So the thing is this right now, the market is buying that China and US were able to come to a consensus and then deliver the goods. But again, I don't think that is very possible. Yeah, I don't think so. Right? Because look at it right now. China, the data are not very good. All right. And US, it's always going to be the number one. So now seeing that China is not doing that well itself, I don't think US will give much room. But the most is that they will just agree that, we prolong the time period again, kick the can a bit down the alley itself. Now, the thing is this, people have been asking me is that how about the 90 days deal between Donald Trump and the rest of the whole world itself? Then what will happen? I will say that eventually this whole thing just come down to 10%. Yeah. So it'll be a good thing. It'll be a good thing. But the total earnings that is available for US, right? I shared with you. I shared yesterday through an MEO video, right? If let's say the whole world really gives them 10%, that means their earnings itself is only like $300 billion to $400 billion. It's nowhere near even 1 trillion. So that means that seriously, if 10% rate for all the countries, the earnings for them itself is going to give them interest for maybe a quarter of the year. It's not going to save them. So the trade deficit just keep on increasing. And with the big, beautiful bill coming in, adding about $2 to $3 trillion into the whole package here, then of course we're going to see that trade deficit going to hit at least what, $40 trillion? Yeah. So I think that there will be a point whereby people are going to realize that this is not going to work. And I think that probably when we see 37 trillion, 37.5 trillion, showing in the market, and then that is where people will get very unnerving, because you must understand that is the combination plus the interest going to be paying. Yeah. So how to see that one, right? Very simple. Go to Google or this browser and just go to US National Debt Life. Okay. Right. And you can see this thing called US Debt Clock. Click on it. It will run to and show you the number now that is running in US. And we are at $36.95 trillion already. We're just really 1 or 2 days away from $37 trillion. So simple mathematics, $37 trillion multiplied by 4% per year itself. You can imagine how much money you must pay just interest alone. Okay, you can see that it's really crazy itself, because you can look at you go down the road, you can see here's not really one moving on. It's all almost like general fixed costs, but it's all the compensation, the federal tax, then the revenue itself is nowhere near to cover. The earnings of US versus the spending of US is really at a very different number altogether. Okay, so take note of that. Yeah, we are very, very, very close to 37 trillion. I'm pretty sure the media will take this to talk about it again. Yeah. Okay, so for Dow Jones today, now as long as the Dow stays up, we can see the Dow heading towards yeah. Okay, the Dow stay up, right, and head towards the 43,014 level. Now today is a DJDD again. So Doji directional day. That means that the market will take the OP as a guide. So as long as market stays above OP, you just have to be a buyer, period, finish. If the market stays below OP, you're a seller, period, finish. And the thing is this, with the current situation right now where the KSI is green and the KCX is black, so ideally itself is more for the buy than the sell. Okay, more for the buy than the sell. Yeah, you can see now gold is tripping down a little bit again, now going down. Okay, moving down to 3302 right now. Yeah, happening at the moment as we are speaking. Okay, hold on. There's a message coming from my mom. Not too sure what she wants. Okay, settle. Okay. All right. So for Dow Jones upside, we know that it will be 43,014. The downside, the downside is going to be 42,515. Well, the thing is this, you notice the pivots are very, very, very close right now. So what does it mean? Now, based on my personal experience, when I see pivot basically climbing down to very tight range, right, it's like basically like pressure cooker trying to burst. So if you look at it right from the perspective as the give you the black and white chart, be easier to see. Hold on, yeah. Okay, I bring the Dow Jones in. Okay, so you from the day chart, you can't really see the two pivots, right? Because it's not there. Huh? But then because we have the pivots on our hand, now we can take a look here as well. Now you can see that there is a very interesting high. Yeah. There's an interesting high that is here, right? That the market seemingly touched and have been touching. So now look at it. We have uh, we have a high here, and now we are here. So if there's going to be a upside split, right, that means that we could see the Dow going all the way to 43,300. Okay, that is the upside. So if you think that the market will go up, right, you can bang on the upside and then target it for 43,300. Yeah. So that is for the upside for Dow Jones in the near term. Now on the selling term, you can see one thing is that over here, this is where the first A point is. This is where you can see the triangle, and you can see what happened to the market. Then we have it again, the triangle. So now we're having again the triangle. So what we can do is this: you can just draw a simple trend line on the chart, very conventional way of doing it. But since the whole world is using it, why not, right? Okay, so just draw a trend line like this. Just follow me. You draw like this. Yes. Why I draw this way is because my trend line basically follows all the closing price of the chart. Now, this our drawing itself is a PTP version of drawing. So what we do is that we draw a trend line, we cut across it, but ensure only one factor is that the closing price has to be above the line. The closing price have to be. So if your line isn't there, it's that you have to tweak it until all of them must be above your trend line. Okay, of course, it's not like a mandatory way to trade, but that's something that I've been using and I think have been working for me fine. So again, over here, you can see that why the market came down, because if I put all the closing price together, you notice that all the closing price stays above my line, right? Until this day, where the market opens right outside the line and then boom, the market sell down. And that was the day where the Dow Jones came down by 800 points in a single day. Wow, 800 points, yeah? So now, everybody, if you draw it together with me, we just have to draw a line and then make sure the closing price are all within here. So you see now, this is how I'll draw it. All my closing price is actually above the trend line. So now the thing is this, unless today the market reverses and breaks OP, then theoretically speaking, it will be a sell. But you look at the trend line itself, and let's say we assume that today the market stays positive, okay? Then theoretically speaking, tomorrow could be a decider. Tomorrow, right? So I repeat, one, either today the market goes below OP and start to sell, so I'll be waiting there at OP. Two, tomorrow then the decider will be. So watch out for tomorrow. It could be decided not to down, it could be decided to go up, yeah. So because we have seen before that once you hit the line, there's always this particular white candle decider that push the market. So there is a possible there's a decider movement tomorrow. It means that one open all the way up already. Who knows? Maybe it was due to the good news from China in London. I don't know. Okay, all clear? All clear. Press number 2 right now. All right, so you can see that today I cover quite extensively from global market to all this thing itself, all because I want you guys to benefit from it, yeah? Okay, that's the one before we go for a short break is the currency market. Now, yesterday I already tell you about the currency market. Not too sure if you caught what I shared. Okay, I'm gonna go that to you. Now, the thing is this, the dollar yen continue to go up, right, today because of the dollar strengthening. But while we are seeing the same thing happening, right, we can see that the KSI is still red in color. So this is still an elephant building up, okay, a downside elephant. So of course, you say, KEL, you see, because of downside elephant, I didn't buy. Now, please do not do that to me, okay? We said before, in the intraday itself, as long as market stays above OP, you just have to be a buyer. Doesn't mean that I say there's an elephant trade itself, you're going to be a seller. I say that only when the elephant get triggered, then you go in. It's telling me itself, I bring the safari to hunt for elephant for a big meal. And then you tell me that because I tell you there's an elephant for the safari for a big meal, the next 10 days you don't eat. You understand my point? It's ridiculous. Come on. So it's very, very tiring when I try to give you all good views, good strategy in the market for you to take note. But people will twist my word and say that because KEL say it's an elephant trade, so I didn't buy the dollar yen. It's always like that, very tiring. So that's the reason why I want to move away from teaching. Okay, so guys, watch out for this dollar yen trade itself. I believe that the US dollar, we should know by default it's going to come down. All right, but then of course, at every downtrend itself, there always be a rebound. It won't be like all the way down for 20 days, 30 days. It's impossible. Like that itself, the market will crack, the world will crash. So there'll be down, up, down. So you just have to be watchful for here itself. Yeah. Okay, that'll be all for this morning revision session. This market talk. We'll give 1 minute break. I'll come back to talk about the revision for gold. Okay, thank you.